I want to start with a question for each of
Sorry, I had my microphone off. Okay. All right. Good evening. I apologize. The microphone was off, and just had to get a minute to get caught up here. We've got this broadcasting on YouTube as well, so that's what I was just doing here. And a reminder that if you are new to trading, and if you find me going a little bit too fast, please just tell me to slow down, and I'll certainly do that. And also if by the way, your sound's okay now? Is the sound okay? It should be fine now, right? Let me know in the questions box if it's okay now. I don't want to sit here and talk to you, and then all of a sudden there's nobody responding here. All right, good. We got a response. Okay, everything's good. Okay, thanks so much. Yeah, the other thing is I do speak a little bit too fast. So if you do find that I'm speaking too fast, again, please just let me know and I'll slow down. Also, if you find me getting into too much technical jargon, you don't understand, let me know that too. But trust me, you're not going to miss out on anything right now if you just don't really understand everything. We'll certainly try and endeavor to kind of make it sort of at a simple level that everybody can understand. Okay. And we're not going to be teaching you obviously how to trade. This is not the point of the session. It's to tell you what we do to teach you how to trade. So, and we're also going to take a look at the weekend review, and that's what we're all about here. I'm going to take a second here to let you read this disclaimer. Keeps the lawyers happy, keeps us out of jail. That's what it's all about. And yeah, while you're reading this, why don't you just punch up where you're located? I just want to get an idea where our audience is here tonight. I'm in the Western New York area, Eastern time zone. And Beautiful sunny and warm day here today. Spent a little time out by the beach and just kind of really enjoying the sunshine and the water. Beautiful Lake Erie. When it's calm, it's really, really nice. When it's stormy, yes, it can really rile up here pretty good. So Houston, sunny Seattle, Michigan. Okay, Southern California, Rhode Island, Georgia, New Jersey. Oregon, Houston, Indiana, Florida, New York, Florida, North Carolina, Stuttgart. Germany. Is that Germany? Yes. Illinois. Okay, New Zealand, Australia. Oh my gosh, we're from all over the place. California, Southwestern Ontario. All right. Whereabouts, Bruce? Bruce, whereabouts? Fort Wayne, Indiana. Tropical storm here in Florida. North Carolina, I heard some weather getting into Washington area here, Minnesota, Florida, Collingwood, Ontario, Pinehurst, North Carolina, Pennsylvania, New Mexico, California, India. Oh, from all over the place. Kitchener. Okay, thanks for that. Kitchener, Ontario. Okay, cool. All right, let's get started. And I think you've already read the disclaimer here. You alone are responsible for all your own trading. Past performance does not guarantee future results. It's not our fault. Okay. There I am, folks, live in a living color. And let me just hit this button. There we go. This meeting is being recorded, live stream. I'm supposed to hit OK on this. Okay, there we go. Um, kind of kind of a sunny day here. So you can probably get the sunshine. I wonder if I raise the blinds, if you can see the sunshine out there. When we have a sunset out here, it's actually very nice. I love watching the sunset. I'm just going to raise the blinds here. I'm not really sure if you can see it or not. Sometimes when I do this, the light comes in from behind me, and then you can't see my face. That can be a good thing. But It's actually very bright, so it's and all you're seeing is white. Okay, you know what? I'm going to close the blinds so that yeah, you can see my face better. Okay, that sounds good. Yeah, you're not seeing the background there with the white. Okay. All right, this is going to be weekend review. Let's get started, folks. Before we do, I've got a quick question for you. If you are new to options, please let me know. Are you new to options? Yes or no? And if you are new to options, if there's enough people, maybe we'll do a little bit of an options primer at the end of this session just to kind of get you familiar with what we're talking about. Because I can tell you that once I discovered options, I never looked at anything else again. Not interested in anything else. So just put in the questions box. You'll find a little questions box icon on your Zoom dashboard. Click on that. I'm the only one that sees what you say there. Okay, there's John. He is new. Yes, yes, yes. No, but new to you. Thanks to that, Ken. Okay, I'm seeing most people here are actually familiar with options. There's some yeses. Okay, Bonnie, thank you for that. Okay, wow. All right. All right, we'll probably have a little bit of an options primer at the end of this session. Just kind of scroll down and give you a bit of a brief review as to what options are and why I never went back to equities after I discovered the power of options. Excuse me. I'm actually talking all day, so I gotta wet my throat here a little bit, folks. Bear with me as I drink this power drink, their energy drink. All right, let's get started. Here's what we're going to do tonight. Give you a bit of an introduction. And then we can talk about the weekend review, look at next week, bit of a beachside chat, and how we can help you become better traders. How can we help you become great traders? Going to give you a 2-minute tutorial. That's actually turned into quite the popular little segment on this session. Excuse me. Have you noticed? If you noticed, or if you're not aware, we have these webinars every Sunday night, 8 o'clock Eastern. I like to go about an hour. Usually end up going about an hour, 15, 20 minutes. I'm going to try and compress it down so that we wrap it up. I don't want to keep you all night, especially if you're out there enjoying this gorgeous, gorgeous evening. And I certainly want to get out there too. So, but anyway, that's what we're going to do here tonight. All right. So please use the questions box for any questions or comments you might have. Brief background about myself. What do I do? How did I get into this? Well, I learned trading the hard way. Yes, I did pick up some good theoretical stuff in various courses after I got burned by my own financial advisor for quite a bit of money. And it's funny because if until you don't really learn these things until you lose enough money. All right. Sometimes you have to lose a lot of money before you get wise, right? You have to get burned really badly before you get smart. And that's kind of, you have to get down to the very bottom before you can come back up and sort of clear the slate with what you're doing. And I guess that applies to everything in life, right? Anyway, I learned most of what I teach, probably everything I teach, from the trenches. All right, that's where I got most of my training here in the trenches trading. And I am going to fix this up here. There we go. Put a little thingy there. All right, so in the trenches trading. That's how I learned to trade options effectively, successfully, efficiently, and through all those courses of the garbage, most of that stuff was not really, it didn't work for me. I don't know if you have for taking courses in the past where you go to these seminars, webinars, take the courses, you hand over thousands of dollars. Back in the days, 20 years ago, 15, 20 years ago, that's what we did. These courses were very, very expensive. It was nothing to spend 10, 15, $20,000 on a course. And you think that, okay, I'm going to walk away with a really good education. Of course, I'm going to make it back on the stock market, right? And it didn't always work out that way. I would buy these courses and I take the DVDs. We had DVDs and CDs and stuff. You put it in the player and you say, you know what? Isn't that funny? That's not the way I remember the guy presenting it. You know, how am I supposed to make any sense of this? I can't even set this up. I remember this one program I bought. I don't remember the name of it or anything. And it doesn't matter, but I remember this program. You set it up, and this thing would constantly ding on your computer, buys and sells. I mean, all the time, ding, 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 ding. And holy jeez, it was just imposing on everything I did. I'd be maybe typing up an email and I hear ding and various kinds of dings. It wasn't just a ding, it was ding, dang, doing, I don't know, all these things. And oh my gosh, get rid of this thing. A little bit of overwhelming information. I don't know what it was triggering on, but it was just. And by the way, it didn't really work all that well either, because I would trade to these things and buy now and then it would sell right away. Well, wait a second here. The market went down. You're telling me to buy what I just sold, and the market just went down. I just lost a lot of money. Anyway, it didn't work well for me. But I knew there was always money in this business. All right. So all those programs didn't really work with me. Maybe I just was too dumb to pick it up. I don't know. But I knew there was money and I spent hours and hours studying this on my own. And then I started trading this stuff, paper trading and then real trading. Then when I started bringing home the toys, all right, new vacations, lots of vacations, new cars, um, bought my kids a couple cars, new house, new airplane. People started asking me, Hugh, okay, you won the lottery, obviously. No, I didn't. No, just trading spy. Well, can you show me? So I started showing people, and before I knew it, they coerced me into putting it up on a web. So created a little website. That was back in 2010. Here it is in our 15th year. We're still doing this. I don't know of any other service that's been around this long. That's I'm sure there have been. But anyway, most of the stuff that I do here, the trading I do, short-term breakout trades, looking for small gains multiple times a day, and that works very well for me. And then a couple of years ago, I guess about a year and a half, 2 years ago, well, it's going to be almost 2 years now, Eagle Financial Products bought us out. And they bought us out, and they brought in another gentleman here by the name of Aaron Stevens. And Aaron is a technical trader from way back in his teens in high school. This guy used to be in the library looking at financial newspapers, magazines. He'd be drawing charts. Back then, I guess they didn't have the technology they have today, so he would be out there manually drawing out charts and learning different things, different techniques. He actually worked as a technical analyst for a $150 million commodity fund. Then we scooped him. And he's in our trading room every morning, in our trading room, identifying excellent longer term, high probability trades. So Aaron and I have this saying, it's when our indicators unite, our trades ignite. There's a lot of truth to that because, see, Aaron and I, both completely differently, completely independent of each other, we analyze the markets. And if Aaron sees his certain indicators suggesting that there's an imminent move to the upside, and if I too see the same sort of thing, an imminent move to the upside on my indicators, and it's probably a good idea to buy call options because the market is probably going to go to the upside. And that's what we do. Anyway, when our indicators unite, our trades ignite. Folks, an announcement here, Spy in the Market, our weekly newsletter that goes out. Make sure you subscribe. You get this, okay? It's a free e-newsletter. You get it in your inbox every Thursday. It's just a brief 3-minute read, light, relevant, even entertaining. We just touch on a different topic every week, and you'll get some great information out of it. Just go to DayTradeSPY.com, and let me just see if I can pull it up here, and I'll show you what to do. Go to DayTrade. That's our website, DayTradeSPY.com. I know it's not that flashy, and there are flashier websites out there. Flashy doesn't always mean, better or whatever, but this is very sort of a subdued. We're trying not to, we're not promising you the moon. We don't say, oh, start with $1,000, you're going to make $1 million in a week. Nothing like that. It's all here. But if you if you first come onto this website, this thing doesn't work for me because it's obviously it's got the cookies in there, so it recognizes me. But when you first come on, you're going to get a little pop-up here. Just leave your email address, and that will also get you the subscription to Spy on the Market. Maybe I could show you here if I go incognito. Incognito, day trade spy. Maybe I could show you this way. Let's try this here. All right, will this work? Incognito. We should probably get the pop-up here. And let's see if it comes. I think if I wait a few seconds, it'll pop up. Maybe it will, maybe it won't. I don't know. I haven't looked at this long time. There it is. There's the pop-up. So leave your email address right there. Get your free report here. You'll get this report. All right. You'll get this report, and it will also get you subscription to our Spy on the Market. And I think you'll find it quite entertaining. This week's topic is going to be find that one thing that you're having trouble with, that one thing that's creating you aggravation, the grief, that one thing. And if you can figure out that one thing and stop doing that one thing that really messes you up, instantly you will see results instantly change. Okay. And the following week, I will probably have a follow-up to this e-newsletter and tell you what my one thing is. And then you'll quickly see that, oh, I see, that worked. Anyway, let's get along here. Let's get on. I better write that down. Let's see. I'm just writing this down. Okay. So I have to write down what I say, right? Because otherwise I'll forget. Folks, we're going to have a beachside chat here a little later on here. a beachside chat, and you can use the questions box and enter your questions. Not guaranteeing that I'm going to get to all the questions, but we'll certainly try and answer as many as we can. And right now, let's take a look at what happened this last week. Quickly go through this. Remember, folks, it's not where you've been that's important as much as where you're going. But it's always nice to see and kind of review what happened in the market last week and just what moved the prices the way it did. On Monday, we had a low, no news day. SPY drifted down off a major resistance. It hit 547. A lot of sellers kicked in. It's kind of drifted along. It was actually quite range bound for most of the day, but then it ended up lower by the end of the day. By Tuesday, we had a consumer confidence report and also a JOLTS job openings report. Now, they were both higher than expected, and it triggered a 9-point sell-off. Again, the market pushed up into that 546, which was a significant resistance level. And those in the trading room would have heard Aaron and I discussing that strong resistance up at that 940, I was 946-ish, and watch for some selling going on at that point. And the market did come down. You could have also have blamed it on the great rotation. Part of the great rotation also kicked it in, but it found some support right around that would that be 539, 539, 538 and a half, 539. And then it pushed back to the upside here in pre-market overnight trading on Wednesday. Employment numbers came out. We had a Chicago PMI report, also pending home sales. But here's why the market really went up. We had the Fed funds rate and Fed Chair Jerome Powell talk about the interest rates and how they expect. Well, obviously, they kept rates the same on Wednesday, but they're talking about probably reducing them in September. So we already had several countries reduce their interest rates recently. We had the Bank of England, the Bank of Canada. I think there was something else overseas. Was it New Zealand or Australia or something? I'm not really sure which. But we had some other banks also start their easing policies. And not that we follow them, but it's just kind of a hint as to what's to come. So that sent SPY down to the mid 553s rather, up to the 553s, highest level in over a week. And it kind of hung around that 553, 554 level in overnight trading, ran up there to a double, possibly a triple top. And that's when unemployment claims kicked in on Thursday morning, PMI reports. Excuse me. They also elevated SPY to a key resistance, 554. That too was a key, I believe, a Fibonacci level. And that sparked a collapse as the great rotation also kicked in. And that means a lot of the money came from the tech sector, the overvalued Magnificent Seven. Tech sector took a bath, and the money flowed into the lower and mid cap stocks. Because what happened here was this: as we have impending rate reduction in interest rates, there's more opportunity for these lower to mid caps to make profit because their borrowing costs are going to be less than the big caps. The big caps had already sort of made their run up recently, so they're shifting a lot of the funds, a lot of the capital from the high tech and in the high cap items into the lower to mid cap because that's where the opportunities lie. So that's what happened there. We got into that, and on Friday that kind of continued on. Technical meltdown continued within the seemingly bad economic news is not bad for the market. This is where I think we might be flipping now. Used to be that bad news was good news for the market, and good news on the economy is bad news on the market. But now it seems to be kind of like the reverse now, where bad news on the economy could also be bad news on the stock market. Anyway, SPY dipped down at 528.60 before it was all over. At the end of the day, we hit 528.60 in the morning there, and then we started to see a little buying come back and wrapped up the day here a little bit higher. Okay, and that's kind of what happened this last week. Week in review, inflation is moving in the right direction. Feds are now more sensitive to the downside risks to the labor market. September rate cut is likely, possibly even one or two more rate cuts later this year. Tech stocks reported strong growth, but not enough to push prices higher as expectations were high. All right, expect a broadening in market leadership ahead, stressing the importance of diversification. This was all talked about. We also had a lot of earnings coming out, and these earnings all supported this. A lot of great positive earnings, but the from the C class there, C-suite, they talked about, well, I'm not really sure. We're going to see what Q3 is going to be like, that kind of stuff. All right, so that wasn't very encouraging. Short-term pullbacks may present themselves, but longer run, inflation is moving to a 2% target. As the economy continues to expand, productivity is on the upswing, and corporate earnings are rising, which is good news. Pullbacks provide opportunities to rebalance, diversify, and deploy fresh capital. Longer term, it's all good. Here's what happened as far as the numbers go. S&P 500 down again this week. What's this, the third week in a row or something? I don't know. Minus 2.1% we dropped. Still year to date, doing quite well, 12.1%. The NASDAQ, same thing. Dropped a little bit, 11.8% year to date. The Dow's holding steady, 5.4% year to date. Okay. Let's take a look at seasonals. After we take a look at some more weekend review. Fed's easing policy now. The site is in focus to shift in jobs. Labor market is still positive, but it's cooling. They say it's a normalizing from the overheated conditions that we had. Artificial intelligence, AI, is here to stay, but it's no longer the only game in town. Tech-heavy NASDAQ entered into correction territory, which means it was down 10% from its peak, and bull market is still likely to continue, even as market fluctuations pick up. We'll see what happens in the coming months. All right, from a seasonal chart, those not familiar, that blue line is a line as to where SPY is right now. The red line is a composite of the last 5 years closing price on the daily charts. All right. If you expand this and zero in and focus, you'll see that in the last week, SPY actually remained rather flat. Seasonally, SPY did slide about 2 points in the following week. We did slide about 2 points the following week. Actually, I want to check that before I jump the gun on that. Bear with me. I don't know if it slid or if it went up. I think it may have gone up. I want to check that first. So what I'm going to do is just pause for a little bit here. August the 2nd, I want to check that. 834, and that is the second, taking us up to the 9th. Let's see, 8384 to the 9th. Okay, so I was wrong. It did not slide, it actually rose. So I am going to correct that. SPY actually rose about 2 points in the last again, the week coming up. Okay, let's see if we got that. So actually it rose about 2 points for the following week. Apologize for that little slip up, but good thing I caught it. Anybody following seasonals, it's a good thing to know which way the markets are probably going to go in the next week. Of course, there's no guarantees that it's going to follow suit, but nice to know that. Let's take a look at what's coming up in the week. All right, this is kind of important. And if you take a look and see that the S&P Global and Institute for Supply Management Services PMI reports, they're both coming up here on Monday. Tuesday, it's going to be a no news day. We do have earnings from Amgen, Caterpillar, Uber, Airbnb, Duke Energy, Marathon, Yum Brands. Individually, they're not going to affect the markets, but maybe aggregately they might have some effect on the market. But basically, if it's not going to impact interest rates, we're probably not going to see much move based on that. Whenever you have that kind of a day, it's going to be mostly technical trading. We're going to see that on Wednesday as well. Earnings include Disney, CVS, Shopify. Thursday, a little bit different. We've got unemployment claims. Earnings include Lilly, Gildine. Friday, another low, no news day. Kind of a very low, no news day here coming up for the week. So the bottom line on that, Expect moderate volatility on Monday. All right, on Monday, and low volatility on Tuesday, Wednesday, and Friday, with moderate volatility back again on Thursday. All right, the best way to trade this, smaller gains on low volatility days. Excuse me. Take smaller gains, have smaller expectations. If you are one to do a lot of scalping, maybe instead of shooting for 10, 12 cents, be happy with 5, 6, 7 cents. You might see a little surprise here and there, but it's always better to take a smaller gain multiple times than to aim for a larger gain. I know some people really aim for those larger gains and they get them, but I find that it takes a lot more patience and sometimes a lot more time. And sometimes it takes more risk because sometimes what will happen, the market will go a certain direction, find its support or resistance, come back down, put you in the loss. Now you have to wait longer to get it. But if you just skim a little bit off the top, skim a little bit off the top, you're building up your war chest, right? And then if you do have a bit of a loss, you can absorb it. There's safety in numbers. That's really what it's all about. Folks, many opportunities all day, every day, every day. We teach you how to spot them and how to trade them. Now, how did I ever learn this? Well, I'll tell you, I spent hours and hours poring over charts, stock charts, and those other charts, the highs and lows of the day. I would spend hours and hours poring over some of these charts where you'd see a low of, say, 10 cents and a high of $2 on an option, on a particular option. And I say to myself, look at this. If I bought this for 10 cents, sold it for $2, I would have made what? What's that, 2,000% or something? So what's that? In other words, if I spent $1,000 to buy it at the loan, I would have walked away with a brand new car. I mean, that was possible, right? If it went the right way, and if you got in at the bottom and not at the top. I mean, the reality is that's not going to happen. You might get lucky once in a while, but rare is that day. So, but listen, I didn't expect to make 2,000. I don't even want to make 200%. It'd be nice, but that's not the goal. But can I not make 6%, 5%? So I knew that there were some opportunities there. I just had to figure it out. And eventually I did. And when I didn't figure it out, I started making some serious money in the market. That's when people started to take notice and they wanted me to show them. And now we've been showing you for many years, and we like to show you now. Folks, I'm going to tell you what some of the programs are that we have here. We got some solid gold, learn and earn actionable plans that you can actually learn right away and get trading right away, right? Start making some money right away. These are exclusively through DayTradeSPY. You're not going to find them anywhere else. And I'm going to tell you right now, I'm going to give you a hint. If you go to our website, you're going to find pricing on some of these items. But I'll tell you, those prices are, how should I put this? They're kind of like the high price. That would be like, an airline seat. Oh my gosh, $1,000 to fly from Buffalo to New York. But if you call customer service, they'll say, well, we have a special. You can get there for $295. Forget the $1,000. You book it now, I can get it to you for $295. Same plane, same flight, same everything. So you book it for $295. So what I'm going to tell you is this. Any of these offers that you see here and on our website, yes, you can buy them through the website, but this is why you guys and gals being here on our Sunday night session get some real value, because this is where the specials are, right? This is where the specials are. So I'm telling you right now, if you simply email customer service at daytradespy.com, that is where, right? That is where the specials are. I better write this down here, .com. And I am going to see if I can highlight this. If you email these guys right here, what if I make this red? Would that show up? Email them for the best pricing on the following things, okay? On the following things. Always remember that. This way you're going to get the very best pricing. So I'm going to tell you a little bit about our inner circle. This is this actually are the very first program that we instituted back in 2010. It was May of 2010. May of 2010. I remember one of my earlier earlier subscribers was a two-time Super Bowl winner. Can't tell you his name. I won't even tell you who he played for. Super nice guy. but I remember having a conversation with him. He actually got burned. He got burned in the market, and he was very excited to join us and just kind of learn how to do this himself. And he started making some pretty serious money. So he was one of our first clients in the inner circle. The inner circle is where we publish every morning just after 9 o'clock, sort of a flash assessment as to the way we see the market shaping up for the day. Okay. Now, Aaron and I are pretty smart, and he's definitely smarter than I am, but as as the ladies will attest, I am actually the better looking guy. Uh, oh, no conceit there, right? That's why they call me Humble Hugh. Anyway, what I want to tell you is that every morning we send out this report. And frankly, we don't really know where the market is going to be a year from now, or 6 months from now, or a month from now, or, even a week from now. I mean, we might have an idea, Aaron might have a pretty good idea or something, but we got a really good idea as to where the market is going today and maybe even tomorrow. Okay, so we have a really good idea where the market is headed in a very short term, and that's what we do. So we send out our morning market analysis. It's like a flash assessment, the way we see the market, right around 9 o'clock Eastern time, the way things are gonna, unfold. Then we send out a follow-up report as to what we actually did. Now, these are both very brief. They're not long, drawn out, 10-page reports you got to mull through and read and analyze. No, no, no. Very brief. Because here's the strategy behind this. Here's the philosophy. Markets go up and they go down. There's no other way they go. They go up and they go down. And we look to see where's the propensity. Where is it likely going to? Is it likely going to go up at some point today to give us a little bit of a profit? Is it likely to go down at some point to give us some profit? So if we can determine this and tell you that, well, you know what, we think the market's going to go up here today a little bit, and it'll get you some profit, maybe 6%, 5% if you buy now. That's all we're looking for, right? So we got a pretty good way of figuring this out. And also, you're going to be invited to our Wednesday night interactive meetups. Every Wednesday night, it used to be Tuesdays. We moved it back to Wednesday. It's kind of midweek. And we talk about anything and everything to do with SPY. So if you have any questions about SPY, or maybe setting up charts, or what indicators we use, or chart patterns, or trends, or anything at all about what we do, bring your questions to our Wednesday night meetups. And Aaron generally runs these now. Okay, he's the guy there for the Wednesday nights. And ask Aaron, and we review the events of the day on Wednesday night. Okay, if you cannot make the Wednesday night meetings, these happen at 8 o'clock Eastern time on Wednesdays, by the way, at 8 o'clock. If you can't make it, not a problem. These sessions are recorded and they are sent out to you right after the session. So you're going to get this fresh in your inbox right after the session ends, somewhere around 9 o'clock Eastern time. Now, if you contact customer service at DayTradeSPY, you could get this for $995 for a year. Or if you don't want to try for a year, just go quarterly at $275. $275 quarterly. Quite the deal, I may tell you. All right. So I think it's really, really important. That is the inner circle. We've been doing that now for 15 years, still going stronger than ever. And that leads us into our program number 2. This is the Day Trade Spy Signal. You're going to get 3 to 5 of these a week. It's algorithm based, sent to your email and cell phone as a text. So when you get this text or email, it's going to be a very specific option that that we are looking to buy. So buy it right away. Buy it within the next 2 minutes of getting the signal. So you buy it immediately, put it up for sale for a 5% profit target. And if it is not sold by closing price, 4 o'clock, simply sell it at the market close for whatever the market will give you. Okay. We are looking for a 5% gain. Many people make much more. We teach you how to make a lot more than that. But we're looking for a 5% gain. This product has been doing extremely well, somewhere around 90% plus profit success. And it's been doing extremely well. And like I said, I mentioned A lot of people make a lot more than 5% gain, but you have to have a target price to deem it a success, right? I have been in many programs in the well, not many, but some programs in my younger days with this, where the stock would go up 3 or 4 cents, and then the presenter says, "See, it's a success," and I would argue and say, "Well, actually, it's not a success because yes, the stock went up, but would you have sold it for a 3 or 4 cent gain? Would you have risked all that money just for a nothing gain?" It's expected to make a little bit more than that. I'm talking about options. I'm talking about the stock. So no, it probably wouldn't have been a success, but we identify a 5% gain on the signal to be a success. Cost of this, again, if you contact customer service at DayTradeSPY, $14.95 a year, $3.99 a quarter, or if you want to just give it a try for 1 month, only $149 a month. Okay. If you really don't like it in 2 weeks, just ask us. We'll give you a 100% money back guarantee. That is the DayTradeSPY signal. Similar to the signal, we have the pick of the day. This is picked a little bit differently. Aaron and I get together every morning before 9 o'clock, and we determine the market direction, the likely direction. We call it out, say, I think it's going to go up, I think it's going to go down. Sometimes we disagree on the direction and the strength. We hammer it out. We look at then we compare our indicators, try and determine, well, which one's going to be the dominant indicator here? Why? Why do you want to go down, Aaron? He'll say, why do you want to go up, Hugh? And then there's days like I think it was Friday. Was it Friday or Thursday? One of those days. We actually had a no trade day. A no trade day. So that's what the signal was, the pick was, no trade. And a couple of people had written in and said, well, wait a second here. We're paying you for a pick and now you're not giving us one. So I wrote back and said, hey, well, hang on. Would you rather not be told that, listen, volatility is way too high? And if you buy either a call or put or whatever we had, whatever it would have been here at the buy time, which is 9:30, right at the market open, you probably would have paid too much for it. You probably would have overpaid for it. And then when they suck the volatility out of it, your option value is also going to go down. Is that what you want? You're probably not going to make your 6% profit on that. So we, thank us because we probably saved you from getting into a bad trade. All right. Now it doesn't happen very often when we get a no trade. I think it's probably happened, I don't know, maybe 2, 3 times in the last year, if that, maybe 2 years. It's very, very rare that you get a no trade day. So the idea here is to buy it right at market open. So what you do is this. You've got your 1 minute candle, your 1 minute charts up there, right? Wait a few seconds for the bid-ask spread to settle it nice and tight, right? So you get a good price. You're going to buy it, always limit price, limit orders, not market prices, just limit orders. And if the pressure is going in your direction, buy it right then. Don't question anything, just buy it. You don't have to wait for the 1 minute candle to close or the second 1 minute candle to close, nothing like that. So let's say it's a call, right? And we give you specific numbers. If it's a call option, you would buy it right then and there if you see the pressure to the upside. You might even want to hold this overnight, but we've been telling people, especially the newbies, look, if you're really concerned about a stop loss, put in a 40% stop loss. I personally don't use stops. I would rather hold it overnight because too often the market will give you your profit the next day. Cost of the pick of the day, $14.95 a year, $3.99 a quarter. You don't like it within the next month? Just give us a call. You get a 100% money back guarantee. How cool is that? All right, last but not least is our trading room. Aaron and I host this together, all right? Two pro traders. Combined, we have over 40 plus years market participation. I think we picked up a few points here and there. I think we know what we're talking about. These are interactive sessions, a lot like this. Learn and earn, fully narrated. This is where our strategies come alive. Daily, 9:20 to 10:30 Eastern Time. Only $6.99 a quarter. 14-day, 100% money back guarantee. This is the best value. If you know what calls and puts are, this is where you need to be. This is where you need to be. All right, beachside chat. Let's take a look at some of the Q&As that are coming in here. All right. Oh my gosh, they are so stacked up here. Bear with me while I go through these here. I know this increases your cost basis. Do you ever recommend rolling your call position to a lower strike if one is within a few days of expiry? No, no, Mark. I don't roll over into next periods or next strike prices, nothing like that. When I repair trades, I generally buy the same option. It's just easier to handle. And there's a whole thing with that we teach in our trading room, but we don't roll into the next strike or anything like that. Some more questions here. Yes, Mark, the pick of the day for Friday was an OPIC day. And okay, so there was a little issue with the pick that went out. I think there was first there was a call and then another email went out. Unfortunately, the timestamp was the same on both, which was really unusual. But I think if we made a mistake like that, I think the first one went out in error, and then we reissued that with the no pick day. So to kind of look at the chronology of that. But I think the next time we're going to make sure the timestamp is actually a little bit different on that. So. All right, next up here. Okay. We have okay, Illinois. Okay, all right. All these places here, the people are typed in as to where they are. My goodness, the list is very, very extensive here. Okay. Congratulations to Mike G. But puts on Friday makes 6% in 3 minutes. Okay. Yeah. So here's the thing, a lot of times with that pick of the day. We're looking at it at around 9 o'clock Eastern time, right? And we don't always know that decidedly where the market's going to go because anything can change between, say, 9 and 9:30. So if we're really not feeling that great about a particular trend or a particular direction or strength, we're going to have to, revisit that. So, we want to make sure that we're very, very secure in our assessment on that. And that's why sometimes, you're going to see something maybe a little bit different on that. So, okay, next question here. I think there's some micro mark, can't remember now. Okay. New options. Okay, I'm going to kick in after the. So what I'm going to do here is I'm going to finish up fairly soon with the questions and a little bit more. I'm going to tell you the 2-minute tutorial. And then after this session, stick around for anybody who is new to options. I'll give you a brief tutorial on options. Another gentleman here, Mike, love the pick of the day. I've turned 8,000 into 30,000 in 7 weeks. Way to go on that. Nancy, welcome. Nancy just joined the trading room last week. Good to see you there. Nancy S on that one. Are the dark columns overnight activity? Okay, so when you're using Thinkorswim, the black background is during market hours and the gray background is post or pre-market activity. Does Schwab only take puts to exercise or do they calls also, even if you're in the money for calls? I've never been in a situation with Schwab as to when they exercise or how they exercise. I know that my objective is never to hold an option to expiration because if I am in the money, I want to sell the option and take the profit. That is the objective of what we do. We are not there to roll over our options into stock, which is what the option is, right? Okay, SPY is currently below 526 right now, just slid 5 points. I'm not sure why. We'll see what happens. And yes, you can make a lot more than 6% on the pick of the day. And that's something else that we talk about in the trading room, how to actually make a lot more than what we recommend. Again, the 6% is just a standard by which we measure success, all right? Okay, and again, we teach a lot of this stuff in the trading room on using Thinkorswim. What chart can I use to track not the SPY price, but the option price on a certain strike and expiration? Okay, Sam, I'll tell you real quick, briefly. I'm not going to show you. I'm not going to bring up on the chart itself. In the symbol field, start with a period and then the stock symbol. So period SPY, and then the expiration date starting with the year, month, and day. So SPY 24 for the year, say 07 for the month being July, and 09 for the day. Okay. Then C for calls, P for puts, and then the strike price. So let's say 355. So period, SPY 240709, C, what did I say, 545, whatever the strike price is. That will give you this chart of the option itself. Okay. Okay. All right, just kind of. All right, here's a gentleman here. Dave, I made about 15 trades to the pick of the day, 12 winners, 3 losers, 40%. So far the losers are outweighing the winners. I don't see how you make money this way. The 95% winners has not been true for the past month. Do you have an answer for this? Okay, so what I'm going to ask you, Dave, is if you can send me your actual trades on the pick of the day. I'd like to analyze that and get back to you. Okay, because if you did not make money on the pick of the day, I'd like to know why, what you did different than what we did, because we actually made money. So I would like to see what's going on with that. So Dave, if you don't mind, send me your log or whatever of what you did in those trades. I'd like to analyze that. Send them to my personal email, Hugh G, so HUGHG at daytradespy.com. I would like to analyze your trades, okay? Just wondering if there's some timing issue or what the issue is. And I like to kind of go back and quickly, not spending a lot of time with it, all right? We're not here to analyze all your trades, nothing like that, but I want to kind of go back and compare notes and see just when you got in, when you got out, okay? So I want to make sure that you're doing things the right way there and that we're kind of on track here. All right, okay. All right. Dustin is asking any imminent recession thoughts. This R word, recession, had come up here in the last little while. I think some traders or investors are worried about a recession. I am not worried about a recession because I think the Feds have that somewhat under control with the soft landing, and they kind of monitor this and control this with their interest rates. I don't see a recession coming. I don't know who started this lately, but the market is still, productivity, everything is still advancing, but just at a cooling rate. All right, there's no recession that I see in sight. The fact that the market went down in the last few days, that is attributed to this thing they call the Great Rotation. I think that's what they call it. So what they're doing is they're taking money out of the Magnificent Seven, all the big top stocks, mostly the tech stocks, mostly overvalued, and they're moving the capital into the lower to mid cap stocks. It's just a rotation out of that. In part because there's more opportunities coming up when they drop the interest rates in those lower to mid cap stocks. It is not a sign of recession that 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 that, that's moving it. So, all right. I heard the pick of the day is determined by not. Okay, no, the pick of the day is not determined by an algorithm. The day trade spy signal is. The pick of the day is determined by Aaron and myself analyzing the markets and determining which way the markets go. Okay, that's what that is. Okay, day trade spy signal does work on an algorithm here. Okay, John S. We did not get a SPY trade later in the day. I'm not sure what you're referring to, John. If you're looking for a pick of the day, there was, I think it was that Friday, whatever. The trade was a no trade. That means you're not going to get one that day. All right. How hard is it to determine the 1 minute candle direction? Okay, so you've got a chart up on the board and a 1 minute candle. So each candle represents 1 minute in time. If you see the pressure to the upside, if it's a green candle, it's forming, it's pushing up, that the pressure is to the upside. If you're seeing red and the pressure is pushing to the downside, it's obviously going to the downside. So, what was the intent of the test emails last week? I don't know. I got a couple test emails as well. I think it was last night or something. I'm not sure who was testing probably our IT guys were testing the software. So just ignore it, okay? Thank you for that, Bob, the math guy. How's my Bernese Mountain Dog doing? Believe it or not, she's not that bad. All right, been giving her her meds and her supplements and whatnot. So, for those who don't know, had a couple bad turns with my 12-year-old Bernese Mountain Dog. She's outgrown her expiration date by a good few years, but we've been feeding her very well, loving her to pieces, and giving her supplements. And she still needs help, of course. She needs help. Her back legs, especially, aren't that strong. So going up and down steps and stuff, she absolutely has to have help. But she's been kind of hanging in there. So thank you for asking on that. She's still with us. So. All right. I am not familiar with the fact that SPY just dropped 5 points last hour. I don't even look at it, Brian, until 8:30 in the morning. That's when I take a look at it. Just because it's going down now doesn't mean it's going to be down. It could go back up here tomorrow morning. We'll see what happens. So, okay. All right. Just kind of going through some of these questions here. All right. Okay, thanks for that, Sam. He went into our Thinkorswim session last week. He said did a good job. Thanks for the recording. So Roxanne, oh my gosh, Roxanne. I saw I think I met Roxanne. Where was it? Las Vegas or something? I can't remember. SPY dropped significantly the entire month of July. First drop was not part of the great rotation. What was the catalyst for the first drop off the cliff? Probably just a technical level of resistance where there's a lot of activity at wherever it was, and therefore a lot of sellers came in. Generally, the summers are generally a downtime for stocks. I find the best time for stocks is in the, after traders come back from vacation, September, October, and the traders come back. July and August, a lot of traders, right? They go on vacation. So they're not trading. So you're not getting it necessarily the volumes or the volatility or whatever. And they're or whatever the market movers are. So there's going to be generally, when the market tends to go down, it goes down a lot in the summer. There's a lot more fear in the summers, and there's just some rebalancing and whatnot. But generally, that's kind of what the idea is. I want to move on here because I want to give you what I did here in our 2-minute tutorial. And I want to kind of give you this here. This is a question I get every now and then here. How do you remain so calm when the market is turning against you? I guess after doing this for many years, you kind of get a real feel for the fact that very much of this is very temporary, both to the upside and to the downside. Markets tend to return to a mean line. I don't mean that being an angry line. I'm talking about sort of an average line, sort of a moving average, longer term moving average. They bounce around. It's like a dog on a leash. It's not going to go very far. It's going to hit the end of the leash, come back. Unless you have a stupid dog that's really trying to just outrun it, then of course it chokes. It only does that a couple times, then it learns, right? It's not going to work. Here's how I remain calm when the market is turning against me. I take a broader view of the market. I take a look at the bigger picture. Okay, the market is going down or it's going up. It's going against me. What's going on? You know, I expand the chart. I physically expand charts, and I see, is this kind of within line of the overall charts? Yes, it might have dropped $1 or even $2, but when I zoom out and I see that we're still in the range bound, I don't get too excited. I know that this is a very temporary move. But I also happen to know that whenever you see a big move in one direction, either way, you'll often see, most of the time, you'll see a reversal fairly quick. So just hang in there. And you did buy time, right? So you should not panic unless you have same-day expirations, in which case it matters more because you don't have a lot of time to recover if the market goes against you. Now, I like same-day expirations, and sometimes I trade them. But I'll tell you, I trade same-day expiration options only when I'm comfortable with the trade or I'm comfortable with the risk, or I think, well, I'm not in it too much. I'll throw a couple bucks at this thing, and if I lose, I lose. If I make some money, I make good money. But usually, my first trade of the day is going to be my main trade. That's the one I'm going to make most of my money on, and I'm always going to buy time. Time is your insurance. It's the thing that keeps you stable. even though you're looking to exit the same day, you want to have time because your theta loss is going to be a lot less should the market turn against you. And then you have to find out, why did the market turn against me? Was it a news item? If it's a really bad news item, that's okay. Because in all likelihood, that news is going to wash out fairly quickly. You're going to see the reversal fairly quickly. I find the market has a very short-term memory for news, long-term memory for support and resistance. Okay. Very, very, so just hang on. It's like a bad storm coming through. All right. A very bad storm. It's like, you're outside, you're having a picnic, right? You're having a picnic, the family's all there, and a storm cloud comes by and it rains. Well, what do? Do you pack up real quick and jump in the car and run home? No, you just kind of pack up and go, go sit under a pavilion or under a tree or wherever you are and get out of the storm for a little bit. It'll dry up, right? And then come back. Um, or maybe you go home. I guess if it's all wet, you don't want to be out there anyway, right? I think you get the drift. I also can see how likely is a reversal in the near term. Again, I look to see, why did the market go down? What news is coming up? How much time do I have? Sit back, relax a little bit, relax. So often when the market turns against you, it reverses. By the end of the day, you'll find that, oh my gosh, had I just stayed with this thing instead of selling out, I would have made some pretty serious money. Something to that. And I like to remain patient, diligent, committed to the trade. Those reasons that I got into the trade at the beginning, I mean, they should kind of, those reasons should still be kind of there for a while, right? They shouldn't just simply dissipate because some quick market, turnaround went against you. That's all I'm saying. And for that reason, with the markets turning against me, I just kind of calm back, have a coffee, go do something else, come back later and see where the market goes. Let me show you what I did on Friday. These are real trades I done on using Thinkorswim. Now, all right, I'm going to assume that if these were only 10 contracts, I'm not going to tell you how many contracts I traded, okay? That's little information I like to kind of keep close to my chest. But let's say we only had 10 contracts per trade, just to keep it simple. Trade number one, I picked up $280 in 6 minutes. I went from 9:39 to 9:49. All right, on the 536 call. These were all calls, all call. So I expected the market to go up. All right, all call options, and I bought for 672, sold for $7. Trade number two, I picked up $490 in almost an hour. I got in here at 10:46 out at 11:44. And that would have been from 741 to 790, $490. Not bad for less than an hour's work, right? Trade number three, $120 in 10 minutes. Where else do you make $12 a minute? Trade number four, $130 in 3 minutes, right? 3 minutes. What was that? One, two, three, four. That was the 532 calls, right? 13 cents from 720. Sorry, 707 to 720. 12 to 12:03, 3 minutes. The next trade number five, I picked up $100 in 4 minutes. And trade number six, I picked up $160 in 7 minutes. Again, assuming each of these was 10 contracts. Okay. So all told for the day, $1,280. The most invested in any one trade was $7,410. That would have been for trade number two. And that's the one I made $490 in just a little less than an hour. And what I liked about this, my average trade time was less than 15 minutes. That, of course, includes that one trade I was in there for almost an hour. I was done by 12:30. Time to expiration, when I said, remember you bought time, right? So I had 1 week. This is Friday's trade. All of these trades expired next Friday, which is coming up this Friday, August the 9th. You'll see that right here. They're all August the 9th expiration. See how calm you remain when you have lots of time? And I can probably tell you with a fair degree of accuracy that that trade number two for 58 minutes, I'm pretty sure the trade went against me during that time, but I stayed with it because I believed in the trade. I had all the reasons that were still valid to believe in the trade to go up. The risk factor to me was low, but the fun factor was high. I loved it. I loved it. All right, so you know what I'm going to do here? I'm actually going to jump to if you are new to options. And so hang in here. We're going to just jump right into this new to options trade. Slideshow. If I do this, will this work? Okay, hang on. New to options. If you are new to option, we're gonna flip back after. We're gonna just spend a few minutes here. For those people who are new to options, okay, I want to kind of give you a brief primer as to what options are all about and what happened here. Screen, okay, share sound. Okay, right. Is this thing good? Okay, if you're new to options, I want you to know what options are. They're simply contracts. They're contracts that gives the options holder the right but not the obligation to trade the underlying stock for a certain price by a certain date. If you expect the stock to rise, you buy a call option. If you expect it to drop, you buy a put option. Call up, put down. Options have strike prices. This is the price at which the the underlying stock, the underlying asset can be bought or sold when it is exercised. They all has that. Can't even talk here. They also have expiration dates. This is the end date at which the contract expires. There are also other things that are part of this, like theta loss, which is a time component, and a delta. I'm not going to get into that too deep in here right now. That's all in our trading room, which we teach you all that stuff. Just remember that there's some real pros and cons to options trading. Part of the pros, lots of flexibility, cost efficient, huge leverage, giving you a very high return potential. Many strategies available. I'm not saying that ours is the only one, but for me, mine works very well. The reason I like mine is because I get in there quickly, make some pretty serious money, and I am able to get out and go enjoy the rest of the day. The cons, of course, there's the time decay. Buying an option is like buying an ice cube. You buy this thing and it's going to naturally melt on you along the way. So it's not a buy and hold strategy. You want to buy it and then get rid of it as quickly as possible. There's also commissions, and it can be very risky if you don't know what you're doing. Now, we here at DayTradeSPY, that's all we trade. You probably picked that up in our name. SPY options all the time. SPY options, that's all we trade, period. SPY is the highest traded stock out there. It's affordable, very liquid. You can always sell it and buy it. No issues with liquidity at all. It's exciting trading, huge profit potential. I cannot think of a better thing to do than to trade SPY options when it comes to making some serious money in anything, except maybe teaching this stuff. Okay. Real quick primer here, one stock, one strategy, 1 hour a day. Over the years, folks, we figured out what works, what doesn't work in both trading and training. And so the next question is, well, why SPY? Why now? SPY follows the S&P 500, the top 500 stocks. Gives you an efficient use of your analysis time. The moves are quick. You can earn your daily gains fast. It's fairly reliable, consistent, predictive. It's even forgiving. And prices can be anticipated in any market. You can make money both going up or down. Okay. And again, just note the disclaimer, there are risks attached to this. I don't want to say that, you never lose, because you do lose from time to time. Okay. Why SPY? Why not? Learn something new. Stay mentally sharp. When I talk to some of these people I get online, it's uncanny how many people in their 90s are sharp as a whistle. And it's because they are tuned to the market every day. They're in there and they know everything. They know this stuff. Hey, look, time's going to go by anyway. You might as well earn while you learn, right? And make money along the way. Huge profit potential for serious traders. You truly can dream, you can truly live that dream lifestyle. Whatever your dream is, you can actually attain it through trading options. And yes, you can make huge, exponential, huge gains in this business. I have, times in the past taken a small amount of money and made a lot of money in a very short period of time. So when you see these stories, it's not necessarily pie in the sky. It can be done. And I have done some of these, all right? Admittedly, I don't trade those $100,000 trades like I used to in the past, or even 50,000 trades, dollar trades. I mean, I don't need to. I don't need to gamble because let's face it, there's some element of stress in these trades, and you are kind of putting it on the line, so you want to be careful about that. But I love the fact that it's very exciting, very thrilling to beat the market in its own game. And what I also like about this, you can pass this knowledge on to other people, like to your kids. You have no idea how liberating it feels for me knowing that my kids know how to make money in this world. Because you and I both know that there's no more job security out there, right? There's no job security. Somebody younger, cheaper, offshore, restructuring. You can be with the company for 20, 30 years. At any time, they can let you go. There's no loyalty to the employees or companies. And especially if you're some sort of in a specialty kind of a um, field. I was talking to this one guy several years ago, actually it was my accountant's. He was telling me how one of his clients, he was some specialist on a machine. There's only like two or three of these machines in North America or something. I don't know what it was. He told me, but I forgot. Very specialized trade that he had. He knew everything about how to run this one machine, whatever it did. And and uh, when he got laid off, I don't know, some company thing, something happened, whatever. Company didn't get a contract or whatever. He really wasn't marketable because for the longest time, this is all he knew was how to run this one machine. Seems to me it might have been a tunnel boring machine, a machine that bores the tunnels, something very specialized. And it could have been that. And so there's no demand. I mean, you only need a handful of people, that know how to run this thing. And he was one of them. But so for the longest time, he was out. What am I going to do? What am I going to do? I mean, he was making a lot of money. A lot of money was working on it. Of course, he had a mortgage and kids in school and everything else. And, you know, you, that's what I like about trading. You can cushion your income stream. You cushion your reliance on an income by knowing how to trade. This is a skill, truly a skill that you can use and right away. And you can start with a little bit of money and make a lot of money. You don't need, years of schooling. You don't need all these anyway. Without all that, getting all that, it's just an excellent thing to do. Real quick, I'm going to give you some numbers here. Now, these numbers are not relevant to today. This was a while back when I punched up these numbers here, but back then, and it's still the concept is still the same. Back then, SPY cost $404. If you were to buy 100 shares, it would cost you $40,400. One contract could have been had for $3. It still could. So it's going to cost you $300 if the stock rises $1, because each contract, by the way, controls 100 underlying shares. So we are talking apples to apples here. If the stock rises $1, you've got yourself $40,500. If the stock rises up $1 with a 50 delta, this is the change in the equity versus the option. Guess what? Your option that you pay $300 for is now worth $350. Well, look at the return on investment, 0.25% versus 17%. Well, which would you rather have, folks? After discovering the power of options, I got to be honest with you, I never look back. I never look back, okay? Why would I? Would you rather not have this leverage making 17% versus 0.25%? Seriously? Just doesn't make any sense. Folks, I'm going to tell you here, if you learn one stock, one strategy, learn from our mistakes. Again, Aaron and I, 40 plus years combined market experience. You think we know something? You think we might have a little something in our toolbox that you could use. So for that reason, jump in and get involved with what we do, and over time you're going to learn everything we do. See, we teach everything we trade, and we trade everything we teach. There's no stone left unturned. I'm just going to scroll back here to this one page. Is this it? No, this is not it. No, that's not it. That's not it. Keep going. I should have actually had this one here. This is the page I wanted here, folks. With this, I'm going to call it a day, folks. I already kept you here. It is 9:11 Eastern time. Thanks for joining us. The recording will be out shortly and on the website, probably in a day or two. and check your browser. You can get into the trading room right there. Thank you for joining us, folks. Good night.
And the sun, be great at what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what